There's a lot of talk right now in our industry that the loan officer is getting paid too much. So I want to share with you what I call the funding wheel of fortune. If you can turn your page over, because this is bonus material, because if my room was full, I wouldn't have been able to do it. So just use the back of a page and write your name in the middle. Something like this. And this is the funding wheel of fortune. Because I want you to understand how valuable you are. Without you as the mortgage loan originator, without you originating loans, nobody gets paid. You aware of that? There's no secondary market. There's no real estate industry. So when you're down and you're having a tough day, this is what I would do to help me, to remind me how valuable I was. So, who gets paid when you fund a loan? Everybody. Yeah. But I want to show you this list so you can really see how big it is. So, does the listing broker, and you're going to want to write these down. If you don't like doing the wheel part, because I haven't figured out a way to make this interactive yet, you can just list them, like just on the left side. But I like the wheel because it's the wheel of fortune. But the listing broker gets paid, right? Does the listing agent get paid? Does the listing company's transaction coordinator get paid? Right? Does the existing mortgage on the property get paid off? So the existing lender? Do existing lenders make money when they get paid off? They get their fees, they get their money back, they get to go put it back out to work, right? Okay. Does the buyer's broker get it paid? Buyer's agent get paid? Buyer's transaction coordinator? Buyers get paid, right? They get their new house. They get to be part of that community. Does the title rep get paid? Title officer get paid? How about an escrow officer? How about the appraiser? The underwriter? Processor? If you broker the loan, broker reps get paid, right? Can you think of anyone else that gets paid? Funder, exactly. Oh, you know who else gets paid down here? Is the appraisal management company. That was a real win for the consumer, wasn't it? Saved them so much money. There we go. Credit. What? Yeah. Okay, what about the county recorder? How about the county? They get an increase in taxes. Insurance. Termite. Management. We as mortgage loan originators, we are an industry of our own. And sometimes we forget our value because we get bogged down with the loan gets declined or something else. And part of the power of habit, and what I'm talking about is developing habits, is to remind yourself that you're valuable. Now, when I was at Security Pacific National Bank, I was number 2 in the whole country. I would do average about 15 loans for just over $4 million a month. There's a guy in Santa Monica. He'd do 4 loans for just over $5 million a month. There was no way I was going to be number 1. Because in Bakersfield, there was a loan officer that would do 25 loans for about $2 million a month. Consistently. So I was never number 1 in number of loans. I was never number 1 in dollar volume. But I was valuable. B of A bought Security Pacific National Bank. At that time, B of A was the 2nd largest bank in California. And I went to work with them because they were going to be my bank for life. And I didn't want to have to go back through what I had at Saratoga Savings and Loan, which got taken over by the feds. I get to Security Pacific, I'm number 2, I'm happy, my world is good. They get bought by B of A. And what I realized is that when they said they were going to be my bank for life, it was their life. And so the challenge became, I had to move. And what I've found over the last 33 years, the only name that mattered on my card was Stephen A. Littlefield. Saratoga Savings and Loan didn't make a difference in my relationships with people. Liberty Federal Financial didn't make a difference. Security Pacific National Bank didn't. Even when I owned Signature Funding. Signature Funding was not what developed my relationships. What developed my relationships with me, showing up, being present, and doing the things necessary to do to get the job done. And even though I worked really hard, there were days where it didn't feel good. And I would use this to remind myself that because of me, all those people get paid. And that was sometimes the effort, the energy that I needed to get back out there and make those sales calls. Because I needed to develop those relationships. And my relationships, if you go back to the Red Velvet Rope, my title rep is the same title rep I've had since 1988. I've done his loan 5 times. I've helped him buy his vacation properties, and we still have a relationship today. We were chatting yesterday about a new farming idea I have for a friend of mine that's got a property management company, and she wants to expand it. And I was chatting with them because if she expands her property management business, then guess who's going to get the referral if somebody decides to sell their house or they need to refinance to remodel it so that they can make it habitable for one of their renters. These are relationships that you develop. And that's why when I talk about the red velvet rope policy, it's not just your borrower. Who else can you become friends with that you can have a relationship with so that you can also get paid? And on those days when it's tiring, remind yourself, this is what happens. You get all these people paid by facilitating that loan. Now, I promise you, because we're such a tight group, the loan box presentation. You can take this and go anywhere. One of the things that happened to me when I started in the loan business is I'd get people approved. And back in 1986, 87, 88, there was no such thing as a 30-day lock. We had 12-day locks. Now think about this. How many weekends fall in 12 days? Generally 2. It usually bridges 2 weekends, which is 4 days out of your 12, which means you have 8 days to fund a loan. And back then, they had to be typed on a manual typewriter. Then they had to be delivered. We didn't have fax machines. We didn't have mobile notaries. So you had to get your loan approved, clear to close, lock it, get the docs to escrow, get them signed, 3-day right of rescission, get them back, and then fund it. I'd get people's loans approved, and I busted my butt. I mean, I'd either write credit letters, I'd get the VOEs, I'd do whatever it needed to be done. And we get right up to locking, and they go, I'm going somewhere else. Now, because I'm me, I would call the people back. I'd wait 30 to 60 days. I'd send the thank you card that I did. I regret that I wasn't able to serve you. And I called them back, and I said, why did you change? They, oh, well, we shouldn't have changed. We ended up getting sold something else, and we actually got a worse loan than what you were offering us. But they had all the excuses there. They didn't feel good about coming back, or they ran out of time. I said, well, what was it? Well, you offered us this rate, but then when we got there, it changed.